please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This evening, the rupee remains the top focus again. The currency opened 11 paise lower at 72.80 to the dollar and went on to hit a fresh record low of 72.91. But the rupee has now recovered more than 60 paise at the back of news that the Prime Minister will hold a meeting to discuss the country's current economic situation as well as the movements in the rupee. The currency has been under tremendous pressure over the last many sessions due to a global crude rally and outflow of capital owing to trade warfare. So far, it is down 13.81% year to date. Lata Venkatesh is joining in now. Lata, so just shy of the 73 mark, we have seen some form of intervention, yes. Also, sentiment seems to have turned on the back of news that the Prime Minister could hold an economic review meeting. What are you making of the rupee's trajectory today?
Well, the rupee was ripe for a recovery because bond yields had shot up to 8.2% in early morning trade on the back of crude and rupee falls, rupee fall and crude rise. At 8.2, that's a very good yield. And the only reason why people would not come is that probably it'll go to 73 and you can buy, you can bring fewer dollars and get more rupees for it and more bonds. But clearly, the news that the PM will meet. Now, there is no confirmation of what exactly is the agenda of the meeting and whether any action will follow immediately. But that is immaterial for the market. The very fact that the government is likely to take some action was good enough. And then there has, of course, been a decent amount of RBI intervention. And the attractiveness of the yield made all the difference. And, you started seeing people who had long dollar positions taking it off. It isn't as if foreign debt investors started putting in money today, although at 8.2 it was a very attractive position. But the very fact that something could come up and you won't get such a level of the dollar made people with long dollar positions sell out, usually exporters. So exporters came and sold big time. They were the ones who were holding a great deal of long dollar positions, as of course were traders. The expectation is that some fiscal and monetary policy, monetary measures could be announced. Monetary measures, of course, will more be like an advice to the Reserve Bank, and the Reserve Bank will do what it wants when it meets on policy day. But it has been anyway supporting and supplying dollars. As well, there could be announcements of, some kind of import curbs on certain goods or export promotion incentives. The more important help for the market came from the trade deficit numbers for August, which were a tad lower than what it was, about $500 million lower than what it was in August. But it was in July. But what is important is the direction. And now with imports getting even more costly because of the rupee fall in September, the expectation is that, $18.02 billion would have been the peak trade deficit in July. And month after month, we should see a little bit of correction. So the fears that the current account deficit could be 3% now will start getting scaled down. All that contributed to the rupee's recovery.
Okay, interesting point, Lata. But before we let you go, some cheer on the macro front. India's trade deficit in August has eased marginally thanks to pickup in export growth. Deficit right now stands at about $17.4 billion, which is, of course, lower than the $18 billion clocked in July. What do you make of the number, Lata?
Well, at the moment, it's only exports that have done well. But chances are that once you start seeing the average of the month for the dollar rupee at 70 plus, 71, we may start to see more pressure on import. At the moment, imports are growing. Import is a larger base in India than exports. Import base would be something like 35 billion for last year, August of last year. On that, it has grown 25%. Last year, the export in July was about 22 billion. And on 22 billion, we have done only 20%, or not even 20, 19%. So even now, the bias is still in favor of imports growing very fast. But by and by, you will start to see that change. And the export percentage growth should overtake the percentage import growth year on year. And that's when you feel a modicum of comfort. The gap is reducing, but clearly not in comfort zone yet. We'll have to wait and see. After a point when you are paying 88 rupees for petrol, people will use less, and even the oil deficit should go down. That is the correct way in which we should be correcting our trade deficit.
Okay, Lata, thanks for that. Now, going back to the rupee for a bit, there have been some expectations on the Mint Street that the Reserve Bank of India will intervene to stem the rupee's fall. Now, CNBC TV18 has conducted a poll among 10 economists to understand what they make of the situation and also to see if the central bank will hike rates before the monetary policy meeting or not. Ritu Singh conducted that poll and she's here with the results. Ritu, what does your poll throw up?
Well, to begin with, the pace of fall of rupee was something that really concerned the markets. Of course, today it saw a good recovery in trade. But that said, that led many to question whether or not the Reserve Bank of India should act at this point of time by hiking interest rates to stem the rupee fall. So we asked a bunch of economists that we polled what they make of this. Is the current rupee fall, does it warrant an RBI action at all? And 9 out of 10 said that no, it is not the RBI's job to contain or to rather to set a level of the rupee. I mean, RBI's stated objective is merely to contain volatility. It is an inflation targeting, body. It is not really meant to control the forex levels. But we did ask them, that aside, is it likely that the Reserve Bank of India will actually act on this and there might be a rate hike before the October policy as well? But all of our respondents said that is extremely unlikely. RBI will not act before the October policy in the event of this rupee hike. So we asked, we asked a lot of our respondents where they see the rupee, and we have the responses on the screen for you. ICRA, for instance, 69 to 75. But the range that we saw across these respondents that we polled is rupee could touch a high of 68 to the dollar by the end of the year, but it could also touch a low of 75 to the dollar by December 2018. So that is the range that various respondents gave to us, and it's on your screen again. Lastly, we also asked them at this point of time, what is actually the biggest macro concern that they think must gain relevance? Is it the rupee fall? Is it the combined fiscal deficit of 7.2%? Is it the CAD at 3%? Or is it the continued emerging market stress? And as you can see, everybody pointed to concerns about the current account deficit actually crossing 3%. We are an oil importing, we're largely an importing country. Our bills are only going to get higher if the rupee keeps depreciating the way it has. So therefore, what we are seeing on the rupee front is actually a result of what is happening on the deficit front, and therefore CAD is something that remains a big worry for the markets.
Okay, Ritu, thanks for taking us through that detailed analysis of that poll. But meanwhile, on the last street, the stock markets also saw a sharp recovery after reports that Prime Minister Narendra Modi may hold a high-level meeting over the weekend to take stock of the state of the economy. This meeting gains importance given multiple recent shocks, including the rupee's weak streak and a steady rise in retail fuel prices. Nifty's midday recovery received a second wind when the Commerce Minister Suresh Prabhu let slip that India's fiscal deficit had narrowed to a $17.4 billion figure in August. This helped the index reclaim 11,350. Sensex ended the day over 300 points higher, and the mid-cap index managed to reaffirm its hold over the 19,000 mark. Anuj Singhal is standing by with more details of the day's trade. Anuj, how sustainable do you think today's rally could be? Is it more of a sentimental positive today?
Okay, after days of incessant selling, finally some recovery for the market, and all it required was for a statement that over the weekend there will be basically a stock taking of the economy, and that was enough. That was enough to scare the bear on the currency, which was in turn enough to scare the bear on the market, the equity market that is. The rupee saw 1% intraday recovery by the time the equity markets closed. Among index gainers, you had ITC, HUL, Sun Pharma, but the big contribution really came from Kotak Mahindra Bank and HDFC Bank, more in terms of sentiment. Larsen & Toubro, Reliance, Infosys, SBI, all on the gaining side. On the losing side, you had stocks like Axis, ICICI Bank, Tata Motors, HPCL, and BPCL. In the F&O space, you had some big gainers like Jain Irrigation, Amara Raja, Jindal Steel, PVR, Godrej Consumer, and NMDC, while on the losing side, Granules, Bank of Baroda, Shrey Infra, Repco Home Finance, and Mahindra Financial. All in all, a pullback, a short covering bounce, powerful one. That's how some of these powerful short covering bounces look like. Tomorrow we have a holiday, so that disturbs the equilibrium a bit. On Friday, let's see the global situation. But the real move perhaps starts on Monday, and we'll take it from there.